Hi, my name is Gregg Wagman. I'm an attorney in private practice in London, Connecticut. I've been an attorney since 1992. I have several areas that I focus on in my practice: criminal defense, bankruptcy, personal injury. But one of the things I've been looking at lately is foreclosure defense. We've been doing foreclosure defense since the 08, 09 problems when mortgages got hammered. But what are we going to do is now when everybody's coming out of the forbearance? If you've been in forbearance, and we have more mortgages in forbearance now than we did in that got behind in the 08, 09, 2010 problems. What are the available programs? What happens to your escrow account? Those are all things that we're going to touch briefly on today. But those are the things that we've been focusing on here in our practice to try and help people out. Currently, the mortgage forbearance is supposed to end July 31st. And so at the end of your forbearance, you owe however long your mortgage has been stopped. So it could be a year of more, the mortgage, insurance, and taxes all owed all at once. And if you've been saving up your money for the past 1 year and putting that in the bank, then you're good. You just pay it up and you move on with life and continue paying your mortgage. The servicer is supposed to send you a letter saying your forbearance is ending, and there are some modifications that you can do to get you back into a performing mortgage. 70% of the mortgages out there are government guaranteed. They're guaranteed by Fannie Mae, Freddie Mac, USDA, or it could be the Veterans Administration, VA loans. They have modifications in place so that you can call them up and tell them, hey, I've been impacted by the COVID, either directly or indirectly, and I was current up until COVID. And they will give you one of those modifications. They will start with the first modification, but there's several different modifications. So you can, if you don't know, and they probably won't tell you, that you can refuse the first type of modification and get into a second one or the third one. And each one has different benefits. So you really kind of need to be able to evaluate those. But the first question is always, is it a government-backed modification, or government-backed or government-guaranteed mortgage, or is it a private mortgage? Different set of rules for each one of them, different sets of rules for each of the different government agencies that back these mortgages. The paperwork that you got initially, probably in a blue folder, handed to you at the closing, should be able to help you figure that out. If not, we could help you figure that out. Who you write your checks to may or may not have anything to do with actually who owns the mortgage or who guarantees the mortgage. What are the criteria? The criteria for getting into one of these modifications from a government guaranteed mortgage is you have to have been current up to within 2 months of March of 2020, and you must have gotten the forbearance because it was COVID related, either directly or indirectly. And personally, I don't know anybody in this country that hasn't been at least indirectly affected by COVID. If they offer you the first one and that doesn't work for you, or the amount is too much, there are second and third tier programs, but they may or may not tell you about those. They may not, the person you're talking to on the phone may or may not even know about those. If you can't afford the modification they're offering you, you can get asked, get bounced to the next one. Each of the different programs has its own benefits. Like, for example, one might say, well, we'll take the 12 months you've been behind, and we'll give you another 12 months to catch up, so you can pay double payments for the next year. Or some will say, well, we'll take a lump sum, we'll put it at the end, reduce the monthly, or they might reduce the interest rate, or they can put a lump sum at the end of your mortgage, which is an interest-free loan for however long you have left on your mortgage. And if you stay in your house until the end of the mortgage, for 30 years, you're not going to have your house paid off. If you sell before then it gets paid off at closing. So they're different depending on your situation. There's different benefits for you in each of these different programs. So you really need to assess or know that have these different programs. When the forbearance ends, so which is supposed to be shortly, the next couple of days, call your servicer, get a hold of whoever you send your mortgage check to. Again, the repayment plan over the next 12 months. So if you only had a 3-month forbearance, then maybe that works for you. Then you're back on track and you're in a performing mortgage. Defer the payments or change them so you can afford them. You could always refinance. Of course, the refinance rules apply. You have to have 80% of equity, the mortgage will be for 80% with 20% of equity, or you have to, add in PMI, the private mortgage insurance. And right now, banks are really slow in refinancing because the interest rates are so low, and they're just buried right now. There's a lot of people refinancing. Your escrow, that's your taxes and insurance that the bank collects and then pays for you. So when they are figuring out your mortgage payment, your new mortgage payment, if they're going to change the mortgage payment, how they figure out the escrow, number one, you have to make sure they get it right. And number two, it can really affect you if they don't take into account some payments that are coming up. So for instance, if you modified your mortgage in May or June of this year and they didn't take into account that in Connecticut, everybody has to pay their taxes on July 1st, when they come to go do your escrow assessment for next year, they're gonna say, oh, you've been behind. And so we're gonna up your mortgage payment by several $100s a month because we didn't take into account the fact that this July 1st tax payment was coming up when we gave you the modification. So that's one of the things we look for is we say to the servicer, no, we're not going to take the mod until August. So figure in the July 1st tax payment into the modification so you don't get hammered next year when they do the escrow assessment. And the other piece is they don't necessarily always get the escrow correct. If you have a privately held mortgage, or if these options don't work for you, like if you were behind before March of 2020, well before March of 2020, you still have other choices. You can still, the old set of rules, the old modification rules are still in place. That's where we send in the full package. We have to send in 6 months of pay stubs, 6 months of bank statements, 2 years of tax returns, and we have to fill out all their forms and send in a package and see if they'll modify the mortgage for you. There's still a Chapter 13 bankruptcy. Chapter 13 bankruptcy gives you 60 months to catch up on these things. The judge will tell them how much you're going to get each month and how it's going to work out. So those are other options that are still in effect. So just because the servicer is telling you, nope, we got nothing for you, doesn't really mean they have zero. That doesn't mean you're going to lose your house at that point. The key to keeping your house is the ability to pay that monthly payment. That's the key. If you have the ability to make that monthly payment, we can help you keep your house. Give us a call if you need help with this stuff. We're here. We've been working on it and studying it, so hopefully we will can let you know what your options are and help you through those if you decide to hire us. My name is Gregg Wagman and been in practice since 1992.